Good afternoon, Malta. Let's ICO. I was the first IT lawyer in Estonia, and I had the opportunity to write the Digital Signatures Act and be part of working out the Estonian ID cards. And I was the CEO of Central Securities Depository and the CEO of NASDAQ in Estonia. Now I have a startup called Funderbeam, but believe me, I've never seen anything like this before, like the ICOs and the initial token offering. So I'm going to dig into what's happening around this. So start with the numbers. IPO market. So the ICO coming from IPO, initial public offering, initial coin offering. So these are the blue chips of the IPOs. From the history, the biggest is Alibaba with $21 billion and Facebook $16 billion. Half this year is $83 billion funds raised globally, but actually these are the peaks because the average size of the IPO is $100 to $150 million. And this is the ICO market. So ICO and the latest sizes of the ICO rounds beats every single, meaning the average size of the IPOs. But the difference between those fundraising is that one, on the IPO side, is a company that is mature, that you can read the annual reports and predict the future. The ICOs is for the new company and for the totally new, brand new ideas. So it is mind-blowing. And latest is Filecoin. On this August, just they closed the ICO. They raised $205 million in 60 seconds. Plus they did the pre-sale for the VCs, $52 million. And it started with Ethereum, obviously, 2014. And on the all-time cumulative ICO funding, $1.8 billion and $1.5 this year. $1.5 billion on the ICOs this year. So what is happening? The future. Actually, when I started to dig into the ICO world, I thought it is just the technology that provided every single startup and every single company a possibility to print their own money. And once you print your own money, you have the currency and you start trading with the currency. Some currency, become some weird currencies, but some currencies become the dollars. But digging into deeper of the ICOs, this is actually what I saw. First of all, it's the underlying technology called blockchain, which starts giving us or providing us the trust. And that's the only problem that the blockchain is solving, and it's the biggest problem, the trust. And on the blockchain technology, we can start exchanging assets. And it's so secure that so it works. And we don't need these crazy intermediaries anymore. But even more deeper on the ICOs, the old and the new, and this courtesy goes to Union Square Ventures. The web, and when we talk about the TCP/IP protocol and HTTP protocol, then the value is captured in the applications built on top of the protocol. And this is going to be vice versa with the ICOs, is that the value is on the protocol. So those ICOs who actually are meant for building the protocols and actually storing the value in the protocols, these are called the real, sort of the real, or the original ICOs. And the latest Filecoin, it's the most pure ICO. So you can imagine that you can start investing into the protocol layer instead of the application layer. And just Naval from AngelList tweeted about it a couple of weeks ago, that the new type of VCs need to be able to read the code, to understand the code, to understand the custody, as the token is everything is about the custody, and you actually have to understand the trading. So it's a shift between the applications to the protocol. And with the Ethereum, this is possible. So you can imagine that you can take the technology and start building your own kingdoms in the most positive meaning. And it changes the way the value is shared between us. It changes the way the countries are managed. It changes the way the corporations are managed. It's changing everything. It changes the fundamentals we've been living so far. But there are different elements on the tokens as well. So the previous one, that's more on the intrinsic value. And that's, if you really want to understand what is the intrinsic value and what it means to build a protocol and invest into the protocol, go and Google Filecoin white paper. You get the nice understanding what it means. But on the tokens and on the ICO side, some of the coins are issued which are backed by the assets. We still use, blockchain is still used as the underlying technology. And once you invest into the token represents the real assets. And that's what my company Funderbeam is doing, because we tokenize the startup investments and startup equity. And when you trade in our platform, you trade the startup equity. The lighter version of it is the rights-backed tokens or the coins. There's no standard yet whether it's called tokens or the coins, so it's been used differently. And that's, for example, 10x. You buy the token, and the token gives you as an investor the right for the profit share of this company. Then it's the intrinsic value, where the token has value only around this protocol and only around the community built on top of the protocol. And then the fourth is the currency, which is the oldest, we all know. It should be BTC. I was struggling with the spell check, but obviously I've lost, and it's Bitcoin and Ethereum and the other currencies. So actually 4 types of coins or the tokens, and when you read it, just always go through and understand what kind of ICO or what kind of token somebody talks about. Now, what are the major wins? Obviously, the more equal access to capital. And I heard talks this morning around the Silicon Valley and the investments in the Silicon Valley. Well, the blockchain is also there to spread the access a bit more equally. Second is the trust, because the blockchain is the trust. Third is the decentralization. People believe that when things decentralized, there's no one who can run away with your funds or some regulators to get for your funds. You are the master of your own assets, because investing through the tokens or investing in the ICOs, you keep your assets in your own wallet, which means that your assets are under your control. But that's also a bit freaky part of the wins. Liquidity, definitely. Once you invest, you can immediately start trading with your investments. And the third is fueling the growth to the ecosystems. I mean, the real protocol-based ecosystems. What's the problem? The problem is the scam. I browsed around different sites that give you the information about the coins. And minority are for the real ICOs. The second minority is about the real business. And the majority, unfortunately, is about the scams. So can you imagine that the young pair of people, they just raised for the brand new idea $40 million, and then all of a sudden, some of the coins are simply lost. Or after raising the funds, half a year later, they say, well, We closed the business because we saw no business opportunity. And that's it. And as an investor, you have no rights, because normally the tokens don't give you any rights. It's just you invest in some kind of a random product. And that's the first thing what investors always need to look at the token investment is what rights do investors get? What is it that the token is giving you? Is it the protocol really? Is it some profit share? Is it something else? Do you get some information? Do you get the follow-ups? What is it? The second major problem around is the investors which have no identity. Because the whole blockchain world is pseudonymous. And there are very, very few ICOs that have done fully regulated way, which means that company knows who the investors are. And most of the ICOs, companies don't know who their investors are. And you don't know what funds being invested into your business or into your protocol. And this is what makes regulators really worried about. The wallet thing. I said it's a good thing, the decentralization. But Funderbeam built the token trading in a way that first we gave the responsibility to the customers or to the investors to take care of their wallets. You know what happened? They forgot the passwords. They didn't know what the keys are. So we had to take the control over the wallets to protect customers from themselves, not to forgetting the access to the assets. But you can imagine if there's so many assets and so many tokens in the wallets and you simply forget how to access your assets, you just lose it. It's not like nowadays in the bank you lose your password or you lose whatever and you go to the office or whatever and say, I just lost it. They identify you and you get your asset back. So that's this still underdeveloped thing. Again, the wallets, when you invest, it's a startup wallet, and you don't know whether the startup will ever use the funds received in accordance with what they said. And white papers have yet no standards. You can get white papers from very detailed descriptions to just 4 pages saying we are doing the ICOs, invest in us, we are so cool. And the regulators started to react on it. SEC, which is the US regulator, MAS, Singaporean one, they are both saying that in many cases the ICO is considered as a securities offering, which means that they should go under the public offering rules. The Canadian one, just 24th of August said, yes, maybe it's the public offering, but come to us, let's work with us. FCA, UK one, on September 12th said, yeah, maybe. So, and China banned ICOs. So the regulators are now very actively reacting. We don't know what's happening, but we're definitely into something very interesting, into something groundbreaking, and into mind-blowing of the way we lived and we're gonna be living. These are my favorites. 10x ICO, Google for the white paper. It's a very good way they use the funds. Filecoin ICO, token economy, and obviously the Union Square Ventures blog. Thanks.